What if I told you that the biggest mistake investors make isn't choosing the wrong stock, it's choosing the wrong mindset? Every year, millions of people jump into the stock market, hoping to get rich quickly. They chase trending stocks, follow social media influencers, and panic the moment prices fall. Most of them lose money, not because they're unintelligent, but because they misunderstand what investing really means. More than 75 years ago, Benjamin Graham recognized this exact problem. His ideas later shaped Warren Buffett, who went on to become one of the greatest investors in history. Today, we'll explore the first lesson from The Intelligent Investor and discover why this timeless principle still matters in today's market. Part 1. The illusion of easy money. Imagine it's 2021. Stocks are soaring. Cryptocurrencies are making headlines. Everyone seems to be getting rich. Your friends are posting screenshots of huge profits, and social media is full of people claiming they've found the next big winner. At that moment, investing doesn't feel like building wealth. It feels like a race. The fear of missing out takes over. But history shows something surprising. Whenever everyone believes making money is easy, many people stop thinking like investors and start behaving like gamblers. Markets rise, excitement grows, then reality returns. Prices fall, and the people who bought based on emotions often panic first. Benjamin Graham believed this cycle repeats because human psychology never changes. Part 2. Investing versus speculating. One of Graham's most important ideas is that investing and speculating are not the same thing. An investor asks, "What is this business actually worth?" A speculator asks, "Will someone pay more for it tomorrow?" That single difference changes everything. Imagine buying a house. Would you buy it just because someone said its price might double next month? Probably not. You'd look at the location, the condition, and whether it's worth the price. Businesses deserve the same kind of thinking. When you buy shares of a company, you're becoming a partial owner, not simply holding a number on a screen. Real investing starts when you focus on the business behind the stock. Part 3. Why emotions destroy returns. Here's the uncomfortable truth. The stock market doesn't test your intelligence, it tests your emotions. When prices rise, greed whispers, "Buy more." When prices fall, fear screams, "Sell everything." Many investors make decisions based on headlines instead of facts. The result? They often buy after prices have already risen and sell after prices have already fallen. Over time, this pattern quietly destroys wealth. The most successful investors don't eliminate emotions. They simply refuse to let emotions control their decisions. Part 4. Warren Buffett's biggest lesson. Warren Buffett has often credited Benjamin Graham for changing the way he thought about investing. Instead of chasing excitement, Buffett learned to value patience. Instead of predicting tomorrow, he focused on businesses that could succeed for years. The simple shift transformed his career. It also explains why many legendary investors spend more time studying companies than watching stock prices. Because lasting wealth isn't built through constant action, it's built through consistent discipline. Conclusion. If there's one lesson to remember from today's episode, it's this. Successful investing doesn't begin with finding the perfect stock. It begins with developing the right mindset. Markets will rise, markets will fall. News will change every day. But investors who stay patient, think independently, and focus on long-term value give themselves a far better chance of success. This is only the beginning. In the next episode, we'll explore one of Benjamin Graham's most powerful ideas, a character he called Mr. Market. Understanding Mr. Market could completely change the way you react to market ups and downs. If you enjoyed this episode and want to learn the timeless principles that shaped Warren Buffett and other legendary investors, subscribe to Legendary Investor, because the greatest investment you'll ever make is in your own knowledge.